Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is June 30th, 2017, and today is Friday, the last Friday of the month for June this year. So let's look at the economic calendar and see what's happening today. We've got three things coming out, starting out with GBP current account, that's import versus exports, and the different cash flow that comes out of it. So it is an important number, but in light of what's been going on yesterday, I don't think it's going to affect it too much. But nevertheless, it is coming out, so just be aware of it. And then at 2:30 and 4:30, two Canadian numbers coming out. One is a GDP number, it's a monthly number, and one is the Bank of Canada business outlook for next year. So keep an eye on these both that are coming out this afternoon. But let's look at what's been happening. Okay, so we're looking here at the Euro USD, and guess what? We've filled in the balance of the gap from yesterday to today in regards to the Euro USD. We're just at that resistance level where we had yesterday, 114.36-ish level. So there may be a resistance here that will, quantify some sort of correction here, but just realize that this is a healthy upside graph, and we could even go up higher to 120. I mean, the momentum is there, and this is what I spoke about yesterday, and I reiterated today. We might not go to 120 tomorrow or today, but the momentum is there, okay? And that's something you have to keep in light, okay? You see that the candles are strong and that there's less wick than there are candles, so just keep an eye on this as this unfolds later today. So just keep an eye on this as it unfolds later today. Looking at the GBP USD, same thing. Well, guess what? We've paired all of our losses since the election at the beginning of the month, and we're right back to where we were before, which I anticipated, and I said that this would happen. This is why it's so important to keep the levels and understand the levels of support and resistance, because in this market it really works, okay? And you see that it really works. Beautiful job if you picked it up down here at 126, and it's trading now at 129.91. So it's about 300 pips higher. Okay, 350 pips higher. So that's a decent move for the Euro USD. Almost correctional move to what we had before Brexit. Now this is a major resistance right here at 129, 130-ish level, because we haven't broken this since Brexit. So this may be a beginning of a correctional move as we've gotten higher highs, lower highs, and we keep on moving up higher. As you see here, we're above the 14 and 30-day averages by some, then some. So this may be a correctional move, and then we've had this previous support here that we broke back last year, and so that's what I'd be looking to really break. So if we do break it, I think we'll be between 130 and 133. So keep an eye on this to see how this unfolds as well. Aussie USD, same story. The dollar's been getting weaker across the board as we've seen the markets go higher. And we're here at the Euro USD. We've paired all the losses from the rate decision back in April, okay? And now we're right back to 76.907, okay? So, things have gotten a little bit stronger here for the Aussie USD. Looking at gold, not much doing, okay? It's been a very quiet week. We sold off from 1252 to 1244, but it looks like it's been weak, okay? If we don't break this 1241, I think we'll be still trading within this range of 1255, 1252-ish, and 1240, okay? So just keep an eye on this as well. Looking at oil, reversed itself a little bit this week. Okay, we had this nice little bounce, $3 bounce, because of some worries that there wasn't enough oil in the markets. And remember, this is going into July, August is the season for people to take their holidays in the Northern Hemisphere. So that includes much of the world's population, including Europe, Russia, United States, Canada, so many people at this time of the year are taking those vacations and therefore consuming much more oil. So this would be a peak season. So this is actually anticipated that it would bounce here. Looking at the Dow Jones. Now yesterday we had a big down day, almost 200 points down, as you can see here. We were at 21,400-ish level, and we just continued selling off, and then capitulating finally at 21,154, and then bouncing off of that we're at 21,272. Now anytime something like this happens, it kind of indicates either it's a top, okay, or because there's a lot of bears and bulls fighting it off here, okay. We're at tremendous resistance at 21,456. we had this double top. Okay, this is what is a little bit worrisome now, that we've had this double top at 21,430-ish level, let's call it 440-ish level, and we tried to take that out 2 days ago, but we couldn't. Okay, and then we just fell out of bed. So this is maybe indicating that people are taking, you know, their profits, people are booking their profits, and it could be, you know, a reversal, at least in the short term. I'm not saying that we're going back to 18,000 necessarily, but it could be just a reversal of people, you know, deciding before the end of the summer or before the beginning of the summer they're going to take their winnings and take it off the table until the end of the summer to see if, you know, they'll jump back into the market. So that could have been this flash flood that happened yesterday into some of the underlying reasons that, you know, there was such a sell-off. You know, markets are still strong, the stocks are still relative selling on highs, okay, but they did sell off yesterday quite harshly. So like I said, it could be people just taking the money off the table just before the summer begins, as you know, summer is generally not a trading season for equities, for stocks and the indices. So, you know, it remains still, you know, tradable, but it's usually not historically one of the more active times for the markets. So just let's see how we go next week, how we do on the NFP, and take it from there. This is Razak at CMTrading. I wish you guys a beautiful weekend. Thank you.